financial argument. Follow us on YouTube.
Now, over the many years, we've been watching the stock market move up, and now it's 22,000 points, which actually means absolutely nothing. The stock market has nothing to do with the economy whatsoever. The stock market right now is completely manipulated to keep all eyes off of what is really happening in the economy. And in the meantime, what the Fed is doing, it is basically setting everything up for this gigantic crash. And what they're doing right now is they're removing a lot of the tools they've used to forecast recession. Now, normally they don't come out and tell you that there's a recession coming because their tools are telling you this. They keep that on the side because they know exactly what is happening in the economy. They know exactly when a recession is coming. But what they're broadcasting out to the public is, don't worry, we see nothing. Everything is great. Put your money in the market. Put your money in real estate. Put your money over here, up to the very last minute, and then all of a sudden everything falls apart and they say, wow, where'd this come from? We have no clue. And what is happening right now, a lot of financial analysts, a lot of individuals, corporations, they're looking at the economy and they're going back 8 years and they're saying, well, something's not right. We're seeing all these different things occur, but the market keeps going up. We're not seeing the sales. We're not seeing the revenue. We're not seeing the tax receipts. We're seeing retail close down. We're seeing housing hitting the top. Now everything's starting to move down and something is wrong. So one of these individuals, Tom Keene, he created an indicator that tells us the breadth of the market. Now, while a job, as we know, is a job, I mean, you could just say, yes, there are jobs out there, but then you have to go a little bit deeper and you need to find out what type of job it really is, because each job is completely different. Each job has a different strength. Each job pays a different amount. Each job is either a part-time, it's a temporary job, it's a full-time job. And he went and he looked at this and he said, well, we have major problems here. Now, if total growth is strong, but is the result of only a few sectors, the breadth of the overall market is weak. Now, this typically provides us with a signal on where the overall market is heading. Now, this brings us to this indicator that he built over the past years, and it is the labor market breadth, which seeks to measure the aggregate health of the labor market by looking at all different subcomponents. So, as we know, Friday the employment numbers came out. The report showed that there were 209,000 new jobs, beating estimates of 183, and the labor market breadth fell to an unsmooth cycle low. And when you look at the graph that he provided, yes, this is exactly what has happened. So the headline numbers, as they always normally are, they make them look great, they massage them, they tell you things are fantastic, they look strong. But the subcomponents, well, they all continue to slow, which is not a good sign, a good indicator of strength in the market. Now, we can definitely see this in retail, and he points this out in his chart. And during the height of the market, we were seeing retail trade around 2 to 3%. We are below zero right now. Actually, during the Great Recession, right before the Great Recession hit, we were hitting around 2%, and we dropped to negative 6%. So right now, in this incredible recovery that they started back in 2009, we are below zero right now. That doesn't make any sense. And if we look at other information, we can see that, again, this follows through, like arts, entertainment, recreation. Again, at the height of the market before the Great Recession, what do we see? We were around 4%. Where are we today? We are at 1%. And remember, all these trajectories are heading downward. They're declining. They're not moving up. Healthcare, which has slowed materially over the past 4 months. Well, again, at the height of the market, we are around 3%. We are now declining, and we're at 2%. Now remember, Obamacare boosted this up to make us believe and think that everything was great. They were able to manipulate the numbers, and they kept doing this. And now since there's no manipulation, you can see what is happening. Now, again, we saw the exchanges, the co-ops, they were all going bust. They were completely imploding on themselves. And this is going to continue to happen because people are looking at healthcare saying, listen, I just can't afford this. Why can't they afford this? Because they don't have the income. They don't have the jobs. And when we look at wages and salaries, well, what we are seeing right now, once again, when we're looking at the labor market breadth, we're starting to see, or we have been seeing it for a long time, that wages and salaries are dropping. Now, there is a 6-month lag on this, but when we look back in time, we can see that according to the scale right before the Great Recession, we were at 90%. During 2008, it dropped down to 60%, and then boom, it went down all the way to 5%. The Fed was able to pump this back up to 90%. We are now around 25% and dropping fast. So this tells us that the labor market breadth, the breadth of the market, well, it's not doing well. Now, something very interesting happened today, and we can see that the Fed is definitely setting it up and trying to hide all of their information, all their indicators, everything that they're looking at, and they're trying to say we don't need it anymore. Now, this is very interesting. Now, this indicator, and we've looked at this before in other reports, and I hate to say it, it's been very accurate, but they don't publicize this out in the mainstream media. They kind of keep this hidden in the background. They don't really refer to it, and it's the Fed Labor Market Condition Index. And when we look at it, we can see that they can accurately predict when a recession is going to hit. And they've done this going all the way back into the 80s. They used it in the 90s. They used it in 2001. They used it in 2008. And when you look at this, you can see that, yes, recession, 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 recession. Now the Fed is out there and they are saying, well, you know something? We really don't need this tool anymore. It really doesn't work. There's no reason for it. It looks like the government, they have the data, so we really don't need this. Now, to me, what they're doing right now is they're basically getting rid of all the tools that actually show what the real economy is doing. Just like they didn't want to show the money supply anymore, what they start to do is they start to hide all of these things, so you really don't know what's going on. Now, of course, those in government, they're putting out this fake data. Now, the Fed's going to say, well, we've been just going along with this data. And this is the same data that's been used since going all the way back. And it's been manipulated since 2008. So you can see what they're doing right now. They're setting all of this up. And they're going to say, hey, listen, we have been just following what the government has been saying. They've been feeding us the employment numbers. They've been feeding us the GDP numbers. They've been feeding us all this information. And they're telling us from their statistical information that everything is fine. We don't have our indicators anymore because we felt we didn't need them anymore because the government was doing such a great job. So they're already setting this up. Now remember, the Federal Reserve has nothing to do with the government. They're separate and apart. They're a standalone corporation. And again, they know this system is coming down. They know it's falling apart. And they don't want to be blamed for this. So they're setting this up to blame another entity, another person, or maybe another country. So we can see this is exactly what they're doing. Now, there is a new study that is out there. And they studied the Great Recession, which, by the way, we're still in. We're in a recession. We're heading into a depression. And what they've been looking at is that, well, we really never got out of the Great Recession. Now, the Great Recession was unprecedented in terms of severity of its impact on and duration of the impact for any period since 1947. The Great Recession is the only period in the U.S. modern history when the long-term trend path of real GDP per capita shifted permanently below historical trend. Now, the Roosevelt Institute, they did a little bit of research. And what they found was the output remains a full 15% below the pre-2007 trend line, a gap that is getting wider, not narrower over time. Now, the research note presents evidence on structural decline in labor productivity growth, alongside the evidence that this decline is inconsistent with pre-2007 trends. The effect of the Great Recession in terms of potential output and actual output growth trends, labor productivity and wages appear to be permanent in nature. And what they're saying is that this new trend that they're seeing, well, everything is declining and getting lower. The output, the GDP numbers, they're not improving. In other words, the new normal of post-2007 recovery implies permanently lower output and income. And they're stating that we've never escaped the Great Recession. There has been no improvement in the economy whatsoever. This economy has been built on stimulus. It's not by the people. It's not by manufacturing. It's not by producing and exporting. It was created and maintained only on stimulus. It's almost like looking at someone that works out, and instead of doing it naturally, using food, using weights, working out every day, they decide to take steroids. And they use this drug, and they use it for a long period of time, and it looks great, but what happens is you end up with complications. It starts to backfire on you. Things start to happen to your body. This is what's happening in the economy. It looks great. We've been on these steroids for this period of time. Well, now we're starting to see all the problems of these steroids appear. And as it appears and as we continually break down, it's just going to get worse. This is why the central banks around the world, this is why they're discontinuing stimulus. This is why they're making this announcement. They might be doing it covertly because they know if they completely remove it, the whole system just falls apart. Because they realize they've used stimulus to the max right now. And they know it's having no effect on the economy whatsoever. And if the government and the governments around the world are coming out with their statistical numbers showing that the economy is at almost full employment and the economy looks great, people are wondering, why do we still have stimulus if the economy is completely fine? And this is why they're talking about unwinding. This is why they're talking about raising the interest rates. This is why they're talking about all this. And again, this is a lot of talk because they realize the world is saying, okay, what is going on here right now? We've been doing stimulus for, 8 years now. Do we still need it? Now, of course, the Fed is coming out and saying, no, we don't need it anymore. But it looks like they are maneuvering to set it up to show that, hey, it wasn't our fault that the economy came down. It must have been Trump. It must have been Russia. It must have been China. It must have been everyone else except the central banking system, because what they want to do is they want to restart this entire system. Now, China's reserves, they're continually declining as capital outflows accelerate. And what we're seeing is a lot of countries, they're starting to remove their reserve dollars from their banking system. And the reason for this is because they don't want to be exposed to the dollar when it goes down. And we can see this is why they've been selling off some treasuries. Yes, they purchase some treasuries, but they sell it off and they purchase gold. Russia's doing the same thing. They're also trading, not using the dollar, so they don't really need the dollar for trade. They don't need to purchase oil, and this is another reason why the dollar is going to come floating back to the United States, because a lot of countries don't need this dollar. So we're already seeing this trend, and it's continuing. It has not stopped whatsoever, because what we're seeing right now is this complete setup. The Fed is setting it up. They're discontinuing their tools. We can see that this new study is showing that, yeah, we've never recovered whatsoever. It's one gigantic illusion. And from everything that we're looking at all these different indicators, the only thing the Fed has going for them right now is the stock market. And they've been using this for a very long time. The corporate media has been using this for a very long time, saying that this is the breath of the market. And we know that this is not the breath of the market. We know that this is one gigantic illusion. And when this whole thing falls apart, well, it's going to be a disaster. Now, the market might never fall apart. Think about this for a second. It might keep going up and up and up, but we might see another 1,000 retail stores close. We might see corporations lay off even more people. We might see strip malls close. We might see commercial real estate where these large buildings, they're just completely vacant. This is a sign that the economy is continually deteriorating. You might see the food stamp money going out to individuals where they're taking on more, saying instead of 47 million, it might go up to 60 million. It might go up to 80 million. And this is another signal that the economy is collapsing. The market has no bearing on what the economy is doing. And this is why you need to get prepared, because it's going to sneak up on everyone. And those people who are not prepared, they're going to be completely shocked because they've been kept in this illusionary world that everything is fine. And when it completely falls apart, there's going to be